see. All right, guys. Good morning. Good morning. Welcome to the morning note. I'm just putting the weather channel on my office TV. It's always on CNBC, obviously, but since we have a Cat 4 storm on the west coast of Florida, I think it's kind of important to watch at least what's the next step for a hurricane. Hope everyone's having a good morning. If you're not in rainy Florida, in the path of the storm, obviously, but again, we still have a job to do. Until the wheels fall off, I say. Hurricanes are like bear markets. You get used to it over time, guys. So, I mean, as someone that has lived through Hurricane Andrew in '92, that was a Cat 4 hitting straight to Miami. It was complete destruction there. So, all we could do is hope for the best. Guess the wind gusts are really going to come tonight or in the afternoon to the Naples, Fort Myers, Tampa area, Sarasota. So, again, wishing them the best. Hope you guys stay safe. Um, our CIO Anthony is in Tampa, well, outside of Tampa, so he's fine. He'll be out of the office, obviously, handling what he's got to handle with his family. I'm more in the Central Florida, a little about an hour away, about 45 minutes away from Orlando on the East Coast. So again, just some rain out here, nothing crazy. Internet's working, terminals working. I mean, what else can you ask for? We will ride it out, of course, as always, and we'll see where we go from here. Good morning, everybody. It is September 28th on a Wednesday, 2022. My name is Carlos Garcia, your founder and CEO of GAR Capital. Thank you so much for joining me this morning. This is the Bloomberg Terminal. If you are new here, again, we do have a Bloomberg Terminal here at GAR Capital. I usually use it on my phone or my iPad as I'm working since it takes up so much screen real estate. But again, it's important to show you a couple of charts that I was looking at this morning. So let's go ahead and minimize this. Again, a couple news, you got the futures and all that jazz. So we'll go over that here in a second. Let's go ahead and remove this. Let me take that. All right, cool. Now we're back up and running. Okay, so Dow futures did bounce back off the lows, take a shot. Isn't that kind of the new thing now? Up 143 points. NASDAQ up about 6, S&P up 0.37% this morning at 3674. Our low of the session overnight was right around 3613. Russell 2000 futures up 0.66%. Crude oil, again, a hurricane in the Gulf. You're going to expect crude oil to bounce at least a little bit. This happened during Katrina and everything else. Now, Katrina was a hellacious storm. I believe that was a Cat 5 hitting Louisiana. But if you guys remember, crude oil, commodities, especially that are in that zone, Gulf Coast, meaning the oil rigs there, they're going to be affected. So again, expect oil to continue to go higher, maybe 85 being your top point of the range. But again, I wouldn't put too much emphasis on energy companies today. Gasoline futures up 1.64%, $2.41 a gallon. Dollar index is up slightly, 0.1%. That's good. The issue is the velocity of these moves, the dollar and the bonds. But again, we're going to keep an eye on bonds. I'm going to show you this chart here in a second. Volatility index is flat, pretty much muted, 3261. Natural gas up 0.17%. Gold futures did catch a bid after the Bank of England said they will be buying government bonds. So again, their own version of QE while they're trying to stop inflation. What is the left hand doing? What is the right hand doing? So again, pound dollar, let's take a look at that. That's down about 0.64% this morning. So that's pretty much the big headline that stood out. If you guys remember, we tapped that candle wick low of 95.96. We are now at 106. So again, some volatility, obviously kind of range bound the last couple of days, still to the downside for the pound dollar, but that's something to watch because the dollar is hurting the equity markets. Let's see here. What else we got? Silver futures down 0.28%. That's 18.28 an ounce. Copper futures are green, 0.61%, 330. Good sign if commodities do bounce here a little bit. Bitcoin futures, 19,000. Bitcoin does not want to die, it seems. 19,075. Ethereum at 1305. 18.3 seems to be that kind of point of support for Bitcoin and on the log chart, if you guys remember. Let's go ahead and go over some bonds and why the market is green this morning. So we just got some news here that the 30-year bond falls 100 basis points. That's what the bond market that the BOE is looking to focus on in terms of what they want to buy. So let me go ahead and close out this news alert. Bloomberg loves to give you all the news right in your face, which is what I love. That's a good segue to bonds. Let's go and take a look at a monthly chart of the 2 year. The 2 year is going to tell us where the market is going to go. Period. End of discussion. If the 2 year does fall, then that's going to be a really good sign for equity markets. As you can see, 2 year Treasury yields now down to 4.12%, now to about 4.11% as the equity markets do bounce. So again, that's some reprieve as we are starting to get closer to, yes, I know, seasonality. Can we at least just get through September, right? Like the song, wake me up when September ends, and then we'll see where bonds go from there. But right now, 411.64 on a 2 year note right now. On a 3 year note, how about this? It is down today, 3.8296. We did tap above four. You could see on an intraday basis how much it has fallen and continued to fall. You can thank the BOE for doing that bond buying operation. Does the Fed do it? I highly doubt it. The Fed is all in on raising rates and just raising us into a recession, which we're already in. So mission accomplished, Fed. But again, this is what it takes to kill inflation. A recession is the poison pill or the chemotherapy in order to destroy the cancer that is inflation. I wish I used a better analogy, especially for cancer survivors and those who have passed away from cancer. But that's pretty much the only analogy I could give at this moment. Good morning. Let's answer some questions. Whale's asking, good morning. Do you expect the USD to be stronger in 2022 or else? Well, if it continues to go stronger, guys, that's a problem because then things are going to start breaking. Equity markets are going to drop, bond markets are going to absolutely just crash to that point. How much wealth has been destroyed just in the bond market itself, just in the equity market itself? So this is no garden variety type of pullback. Obviously, the dollar and the bonds are making things a lot more difficult than it should be. Obviously, you could see here on the max chart that we've been tracking now for a while. 114.76 was that 161.8 extension. We're near that. Would that be resistance? Could be. How about 121.02? That's back in 2001 for the dollar index. Could that be the next round as well? Let's go ahead and place an alert above that wick high at 121.02 if we get any craziness out there. Do I expect us to go higher in the dollar? I don't. I think that the now the Fed or the Fed futures pricing in more of a 50 basis point hike in November than it is a 75. So you can call that a pivot, call it whatever you want. But again, at least we'll get some kind of reprieve. But again, we need to see what the Fed actually does in November, not in October. October, there is no Fed meeting. So that's something to look forward to. And then also we have earnings. Keep in mind, earnings, big issue, the dollar. We're going to see that dollar affect EPS growth. I don't expect our earnings to be that strong either. But again, as we get ahead to the seasonality of usually strong period of the stock market, November, December, holiday season, we could get a little bit of a bounce based on seasonality. The question is, when does the bottom of the 2 year yield hit? That is going to be our tell in regards to the stock market. Let's see. Good morning, ENPH. Let's see it. I apologize that it's so dark here. It's just raining outside. Let's take a look at the hourly. Not tons of movement. You have a little bit of a head and shoulders, I guess, formation on the hourly. Let's take a look at the daily. You do have a gap to fill right here at 225.65 and right here at 258.35. If it does break down below 271.36, 258.10 seems to be a nice level if you are looking to buy. End phase, it absolutely been on fire. Energy companies have done well. But again, if you wanted to start a position, I would say around 258 seems about right, that first gap fill. Does the yield curve inversion and its history is calling recession make you think that we're in for a bigger economic shock than what is priced in? Curve has been inverted for a while. Absolutely. And that is something we've been talking about now for a while, the inversion of the yield curve. And again, that always precedes a recession. But guys, we are in a recession. I mean, we already got those 2 consecutive quarters of GDP negative growth. I think a lot of individuals are still thinking that we're not in one, but we are in one technically. So the question is, does it get more protruded? The answer is really based on bonds. If bond yields continue to go higher, it's going to get worse. If bond yields fall, we'll see a bottom. I wish there was a little more to that, but it really isn't. We need bond buyers to start looking at these yields as attractive and start buying them. You already see that in England, where they're buying the 30-year, the government. Japan has been doing that. Hell, we've been doing it with QE years ago. So it's nothing new. But again, when money is looser, things get better in terms of the equity markets because everyone wants to buy equities to chase yield. But when you're in a restrictive monetary policy environment, the idea is to kill speculation in order to kill inflation. That lowers asset prices. That's basically the name of the game. Can't have one without the other. We can't have a soaring stock market and yet have, inflation go down the way we need it to, at least at the 2% target that the Fed does. So again, it's a very slippery slope. I mean, you're talking about hard landing and soft landing. How about this point? We just want a landing, any landing at this point, because we're right now hovering around those June lows. But yet, interesting enough, if we bring up the S&P futures, and I really want to show this, we'll go and bring up the SPX, and you remember the low here on the 16th, the 17th of June, right around 36.39. Let's do some comparison real quick, and we'll compare it with the 10-year Treasury yield. How's that? How about this? We topped out at that low here, right around what, 33.4%? But yet now we're above that. We're now at 4.8% on a 10-year basis, right? TNX 10-year basis. Make sure I have the right one. Was it 38? Excuse me, 39.64. You could see it right here. So we have made new highs, but yet we're holding the lows on the S&P. Still on that low phase here, right around 36, 33. So again, if you would have told me back in June, hey, we're going to have a, 4% 10-year yield, I'd expect us to go a lot lower. So again, that is some kind of good news. And again, we could see here, at least on the 3-day basis, some kind of reprieve in terms of the 10-year and the 2-year. So that's a good sign. Again, the question is, does it stay low enough for markets to catch its feet, to catch some traction, and at least bounce, and at least on the lower end side, just fill the gap to 37.47 on SPX? Could that happen? Absolutely. Have we had just one, two, three, four, five, six sessions in a row of red on the S&P? We'll take a look at the RSI together. Let me see if I can get this going here. Okay. I switched out the chart. Let me see if I can bring it. There we go. I actually maximized it by mistake on my Mac. My apologies. All right, let's bring up SPX together. SPX will bring up on an hourly chart on the RSI. Nothing special. Let's bring up a daily. How about a 26 reading on the S&P 500 RSI? But yet last time we were at that low level, that was in January. We had a nice spike back up to 45. So again, really the idea is to get an upside bounce just on oversold conditions. Doesn't mean we can't roll over a little more, but again, yields are helping us. Again, I've been saying it for the past couple of days. Nasdaq was green yesterday, so it's not like it's impossible for us to have a green day. But again, it's tough sledding out here. It's just frustration station. That's where we are in the market. So we just have to wait and see as we move along. Let's get back to the questions. Let me bring up the hourly. Okay. Hurricanes hit, markets tank. Ain't that the truth? We did have that back in Katrina. So again, imagine having rigs offline in the Gulf. Not fun. Insurance claims, not fun. More consumption of goods, not fun for inflationary readings for the Southeast. So again, yeah, right? Isn't that the case? Hurricanes hit, markets tank. Or it could be just one of those things where we bounce too. Either one. Good morning, Carlos. Any good price to enter on Oxy? Oxy we talked about yesterday. Let's go and bring up Oxy together. We'll bring up a daily to kind of give us a little bit of a look. I have an alert here at 56.12. That is support. 56 to around 54 seems to be a level that you could work with on Oxy. TQQ is something to dollar cost average or a quick swing trade. I actually bought some more TQQ. That's going to be a swing. Leverage products, I tend to swing. I don't want to own it. So again, I'm okay with owning just straight Qs, not TQQ. But again, I do own some. I'm looking for a swing. If we can get back above 40, again, we could see where we go from there. Again, guys, you're not going to get to, zero on the S&P. That's just not going to happen. You're going to get some kind of bounces and so on and so forth. That's just the name of the game. But at the end of the day, we need yields to play ball. That's really what I'm looking at, is just the yields. Can it get to the point where, hey, we can get a little bit of a relief somewhat? Maybe we feel that gap fill in SPX right around 3,700. But right now, futures are back and forth. We were as high as 144 on the Dow. Now we're up 100 points. We were up about 60 points last time I checked it. The new Apple price, how about that? Apple also had a note that came out stating that they are lowering their production for the new model of iPhone. And again, I'd even buy the new model of the iPhone. Again, I have the Apple iPhone 12 Pro Max or something like that, the big boy. So again, Apple under pressure, 147, but yet the market is a little higher today. I mean, S&P up about 0.23, even with Apple going down. Let's see if they bid that. Maybe we get back above 149. In terms of gaps, there's no real gaps on the daily on Apple. So really, in terms of where the next stop could be, 145, sure. My IRA is full, is only Apple. So again, this one's going to hurt today, but I still love the company long term. You could see now 147.74. We have a nice trend line that we created. If you guys remember, just this downside, we broke out of it and stayed above it. 144 is that next level down, or 147 if we bring up the 4 hour. You could see it right there. That wick, pretty much perfect. 145.41 being key support if you were looking to buy Apple. Would I run out and buy some this morning? Not at all. Maybe we could see some earnings and see how the dollar is affecting them before they move forward. Again, we'll see their guidance. And they didn't do guidance last quarter, if you guys remember. So they've done this many times where they lower the bar, they smash it. Apple's everyone's favorite again. So it's really just a wait and see approach for Apple. We are now above the lows on S&P at 36.30. We're at 36.67. Another day, another shekel is the saying. So let's see what happens this morning. Keeping it tight, keeping it safe. Let's see what we get in terms of market movement today. It is Wednesday. End of the month is Friday. Maybe we get some rebalancing, bond rebalancing, stock rebalancing. So we'll see where we go from there. Have a great rest of your morning, guys. Stay safe if you're in Florida. We'll keep you up to date as always on Twitter and Instagram. As long as we have internet connection, we will be connected with you all. Have a great rest of your morning. Stay dry, and we'll see you tomorrow for the morning note, weather permitting. Cheers.